All right. Good morning, everybody. Good morning, Carrie. Good morning, Cam. Welcome to the chat. Today is Tuesday, February 28th. Hopefully, y'all are having a great February. Today is the last day. Currently, SPY is trading at 397.57 versus the close yesterday at 397.73. So really not much change from close of yesterday, but we did get some economic reports. We go over to the investing calendar, economic calendar on investing.com. Good morning, David. Good morning, Daniel. Glad to see y'all here. But if we look at retail inventories, this was a big report for today. Came in at positive 0.2 versus positive 0.1 in the last reading. And then the wholesale inventories came in negative 0.4 versus a forecasted 0.1 positive and positive 0.1 in the last reading. So kind of a mixed report that we're getting here. Wholesale inventories are down, which would be inflationary, but then retail inventories were up, which would be disinflationary. So didn't really see much of a reaction to this report that came out at 8:30. Initially, we did end up selling off, ended up coming back, and now we are trading slightly lower than we were, about $1 or about 0.25%. So not really much change at all. The big report for today is going to come in about 30 minutes, which is going to be the consumer confidence. So the way that this is going to work, if consumer confidence is too high, so say this comes in at 110, that means that the Fed needs to raise rates more in order to cool off consumer confidence and stop people from spending so much money and perpetuate inflation. But if this comes in lower than expected, if it comes in a lot lower than expected, say it comes in at, say, 103 or below, that means that we could be headed into a recession according to the consumer. But if it comes in between like 105 and like 109, somewhere in that range, I think that would probably be positive for the markets. So outside of that range, probably negative for the markets, and then inside of that 105 to 110 range, positive for the markets would be my guess. And then, we talked about wholesale inventories and retail inventories, so that is pretty much what's going on today. We do got, I think, another Fed member, one of the new Fed members speaking today. Let's see. Fed speech calendar. Good morning, Toxic Chaos. Good morning, Kamala. Good morning, Brett. What do I think of Intel? Have a credit spread for puts, 24, 25 strike prices. I'll have to check that out. Give me 1 minute. Let me try to find this Fed speaker that's supposedly speaking today. I'm not seeing them on the calendar, but I think it was supposed to be the new Fed member. I forget what their name was, but they're supposed to be speaking today, as of what I heard at least. But looking at the 10-year, 10 years up, surprisingly, with this report. Maybe this is front-running the consumer confidence, possibly. And then if you look at the dollar is actually down at the yesterday's session lows. So this continues to trend down. This has an inverse correlation with the markets. So if this goes down, the markets go up. If this goes up, the markets go down. There's, I think, like a negative 0.7 correlation with the market. So it's pretty accurate as of lately. And right now, SPY is currently down 0.15%. And the two earnings trades that I took on, Zoom, that one's doing pretty well. I was assuming that it would stay above 71. Target, a little bit dodgy. I assume that it would be above the 168 level, and it's a little bit below that. Both of them ended up beating their earnings per share. I haven't checked in on Target's revenue and how that came in. Let's see. Revenue came in at $31.4 billion. And if we check out my Notion page, Target was expected to have $30.7 billion in revenue. They actually did 31.4, and then their earnings ended up coming in at like 170 or something like that. 189 actually versus 139 expected. So it was a double B earnings and revenue. Try to check in to see if they gave any guidance for the year. That's also an important measure, but it's hard to find guidance to put into these notes that I write before the earnings. Let's see. Revenue up 1.3%. Beat the estimates. Yeah. Sees Q1 earnings per share 150 to 190 versus a 214 estimate. So they missed on their guidance for the first quarter, and then for full year 2023, they're expecting 775 to 875 versus Wall Street expecting 554. So that's actually a sizable difference in what they expect for their earnings versus what Wall Street is expecting. So that, I think, is a very good earnings report. I think this is probably going to head above that 173 level, which is exactly what I wrote down. So they beat on revenue, they beat on earnings, and they guided up for year-end 2023. So this could probably easily go above 173. For Zoom, on the other hand, that one's actually coming back down to where it was yesterday, but this was another double beat. They ended up beating on the earnings per share. They ended up beating on the revenue. The call debit spreads that I opened for SPY yesterday are basically losing all their value. SPY's trading at 397, but making up for it with Zoom trade. This one is up by 42. I still think that I'm going to hold it. I think with the double beat, it's pretty unlikely to come back below that 71 mark, so I'm not too worried about it. And then with Target now going up, that should help make a little bit more money as well. So Target, these are going for 63. Good morning, Mike Trills. Good morning, F. And then I'll get to that Intel put credit spread after we analyze this. So this one's up 20%. I got it for 103 credit. Currently, it's going for 86. And if we check out Intel, looks like the dollar is rising, so that's why you're seeing SPY pulling back possibly. Intel currently trading at 24.83. You're assuming that it's going to stay above 25. So just under that assumption alone, you're very close to the strike price, which puts you in danger of going in the money and taking your max loss on it. That would be a new 52-week low. I would really want to pay attention to the other chip maker names. So NVIDIA currently trading at 230 still. AMD still trading at 77. So all of these are still hanging up there. And let's see, MRVL, Marvel, they still haven't had their earnings report. That could move Intel in one direction or the next. Reporting on 3/2. So they still have a couple more days until they report. But yeah, with Intel, just because it's so close to your strike price, that's what would worry me. Unless you do get a bounce off of the 52-week low at 24.59, then you would be fine. But the way that I would probably trade it, I would probably go another strike price lower, like 24.23 or 23.22. Just to put the odds a little bit further in your favor. 10 years on the rise again, close to that 3.98 level. So this could be moving up to break a new high. It's been in this range of 3.9 to 3.98 for the better part of the last, let's see, 1, 2, 3, 4, 5, 6 trading days. So if it does end up breaking that upside, we could see a decent trigger to the downside for QQQ. QQQ is down only 0.2% as of right now. I think this might head below, I'd say 290 in the next couple of days if we do crack that 3.98 level for the 10-year. Now, with debit spreads, I've been giving the expiration date a couple more days, and that's really helped me out quite a bit. Let's see. QQQ call or a put debit spread, assuming that it's going to be below 290. I would probably set my expiration date. Well, we want to base it on what economic events are going to be coming out. We do have the consumer confidence coming out in about 20 minutes. But other than that, let's see what we got. So today, consumer confidence at 10 a.m., manufacturing PMI. So this is basically a proxy for the supply chain. If this comes in worse than expectations, that means our supply chains are getting worse than expected over the next year, which will be inflationary. So that would be bearish for the market. And then if it comes in higher than expected, that means that our supply chains would improve. That would be disinflationary, bullish for the market. Thursday, we have jobless claims and non-farm productivity. I don't think that either of those are going to be a big event unless jobless claims comes in a lot different than expectations. So if it comes in at like 180 or 220, then that would probably trigger the markets down. But if it comes in between that range, say if it comes in like 185 to 205, you're not really going to see much difference in the stock market. And then non-farm, this is basically GDP. It's expected to come in at 2.6. So the GDP report came in at like 2.7. So that's not really going to change the market unless it's completely different from the GDP number. Say if it comes in way hotter than expected, that would be bearish for the market because rates would have to go up in order to slow down the economy. And then if it comes in lower than expected, that means that we can lower interest rates or lower the pace of interest rates, which would be bullish for the market. And then services PMI, that's the big event for this week that I'm looking out for. So this is basically a proxy for services inflation. If this comes in higher than expected, that's inflationary, bearish for the market. So my take is probably going to be maybe even an option that expires next week instead of this week, just so we get that extra day after the services PMI. And if we're looking at the 290 strike price for next Monday, that is not next Monday, March 6th is next Monday. If we're looking at the 290 strike price next Monday, we're paying only 35 cents in order to open this option. So that's not a bad deal at all. And the 10-year is just above 3.98, currently at 3.983. The dollar made its way back up to break even from yesterday's close. And these trades are going for like 34, 33 cents a piece. So usually whenever I open these, I don't spend a lot of money on them. I don't think that you should spend a lot of money on an out-of-the-money credits or out-of-the-money debit spread just because the odds are stacked against you. But I would like to put a little bit of weight down on it, like $150, $200, somewhere in that range. So probably going to open 6 of these at 33, assuming that Qs will fall below 290 next Monday. All right. New options alert. Premium members. Just opened a new QQQ put debit spread that expires next Monday, which is the 6th. I opened them at 33 cents each, and I'm saying that it would be below 290. And the reason being, the 10-year Treasury rate went above that 3.98 level, currently railing up against it, so not really breaking it so far. But you did top a new high. So if this continues to perpetuate up, if we're closer to 4 by the end of the week, that would definitely weigh negatively on QQQ high-tech growth names. So watch out for that. And let's check out FOMC watch tool, see where rates are headed I saw that the odds of 50 basis points for the March meeting did climb from 24% to 26.2%, so it's still below 50, well below 50. We don't have a lot of data coming out between now and the Fed event. The big one is going to be CPI, which I think is not next week, but the week after. So that's probably going to be the big change that the markets need to see in order to either determine 25 or 50 basis points. We could have some Fed members coming out and saying that they're voting for 50, which would definitely shift the markets in one direction or another, but I think that CPI is probably going to be the big one. Looks like we topped out at that 398 level, and now we're pulling right on back. Nice bounce on Intel. Yeah, it's getting close to that 52-week low. 24.79. Still bearish, still below 50 RSI for the 5-minute chart. If you're looking at the hourly chart, also bearish, below 50. So for me, I would avoid that 24.25 put credit spread personally, but everybody's got their own opinions. The VIX is still trading basically flat, 21 for VIX. Yesterday we had some big bids for the VIX, where people were buying I think one person was buying $40 call options expiring in May of this year for 50 cents each. They spent, I forget how much money on it. And then they also bought, I think, July expirations, same 50 cents that they spent per contract, and I forget how many they bought, but they were assuming that the VIX could go all the way up to, I think, 65 by June or July, which would be pretty nutty for the VIX. We haven't seen the VIX hitting 40 since 2020. It's the last time that we saw it hit 40. Back in October of 2020, and the last time that we saw it hit 65 was way back in COVID era in March of 2020. So it would be pretty wild to see the VIX going up that high, especially considering the zero data expiration options and how that can be kind of distracting to the VIX, considering the VIX is traded based on 30-day expirations. But if we do see that high of a VIX, that would be chaotic for the market for sure. Zoom is finding a balance at 74.50. Target is climbing a little bit more. Currently trading at 171. I think this is going to head to that 173 level, but I also thought that Zoom would be up closer to 80. It did hit 80 after hours, but then ended up pulling back in the pre-market ever since 8 o'clock this morning. Let's see what the price targets from Wall Street are. 78 from 75, remains neutral. Benchmark reiterates buy on Zoom. 102. Jesus Christ, 102 price target. That's ridiculous. Zoom shares are trading higher. What's going on? Earnings. Duh. Credit Suisse reiterates neutral on Zoom. $83 price target. So it's giving up basically all the gains that it made in the after hours yesterday. Let's see. Piper Sandler remains neutral. $78 price target. So basically, we're seeing a bunch of neutrals and buys. I would think that we would get more buying pressure after a double beat, but I think this is still going to stay above 71, which is the price target that I chose for this trade. Let's see. I would say that cash is the most important position that you can be in right now. Save up as much cash as you can. All right, let's see. Target, this trades up 60, well, 30. This is based on the daily change, and target was down yesterday towards the end of the day. Let's check my UVIXI shares. They're trading at 504, so not really much change. UVIXI is down 2.5%, whereas the VIX is basically flat, so UVIXI continuing to lose value. Let's see. We could also make a trade on TLT based on the 10-year going up. If it cracks 3.8 and heads to 4, that would send TLT likely below $100. Currently, it's trading at 100.5. That's looking bearish on the 5-minute chart. Probably bearish on the hourly chart. Yeah, all below 50. And on the yearly chart, 1 year, 1 day, still bearish. So that could be a decent opportunity to take on 2. Maybe even better than the QQQ position, just because they're more correlated than QQQ. Sometimes QQQ can go up even when treasury rates are going up, like we saw during January and early February. That inverse relationship was broken for a good while. But the dollar's fallen, so if that's any measure of where SPY should go, should be going up right now. Currently trading at 397.5. Still got those call debit spreads, assuming that it'll be 401 if the dollar keeps headed to a new low. I think we could test 400 again. And QQQ is also going up with SPY. Not too surprising. It's very interesting that the 10-year is almost at new high, but then the dollar index is making a new 2-day low almost. Unusual to say the least. Usually they trade hand in hand with one another. When one goes up, the other goes up, but that's not what we're seeing as of recently. SPY levels for today, I've got 397 as a support level, 395.25 as a support, and then our next resistance is all the way up at 401.44. If we want to be a little bit more granular, we could take the open of yesterday, which was 399.86, so basically 400. Nice round number. I'll extend that to the left since there's no real bearing for that. Let's see. Left extension on. I probably highlight this a little bit more. Put it as like a 3, just because it's that, strong psychological number. The markets are more likely to move in one direction or another than, say, the 397 mark or the 401.44 mark. More people watching that price level than people paying attention to 397 and 401.44. Good morning, Guile. All right. Might be coming back to test that 397 mark again. Oil is trading higher too. Interesting. Okay. Well, that's kind of to be expected whenever the price of the dollar, or whenever the value of the dollar goes up. Oil will go down, and whenever the dollar goes down, like we're seeing right now, oil will go up. So currently trading at 77. I've heard a lot of people piling into BOIL recently, which is a natural gas leveraged ETF. This one's up from 434 to 630, so a lot of opportunity already missed here. But if you do think that we're going to have a colder winter later on, it's been a pretty warm winter up here in the Northeast, interesting enough. Haven't really had much snow days compared to what we saw last winter, especially. Last winter was awful. Then you would expect natural gas to go up. This is, again, a natural gas ETF. I think it's 3 times leverage, but I'm not 100% sure. Let's see. Boyle. Ultra, Bloomberg, natural. Oh, it's a 2-time leverage. So if you expect natural gas to be on the rise with more people heating their homes, then you would expect this one to go up. But right now it's kind of flattening out back to where it was in February. You got that decent dip all the way down to 434, and now it's recovered that. 10-year still trading high, still not breaking the high like we saw this morning. And then that dollar index is headed down even further. So I guess the call debit spread that I got ought to be doing a little bit better than this morning whenever SPY was falling below 397. But we do have the consumer confidence coming in about 7 minutes. Currently it's 9:53. Consumer confidence coming in at 10 a.m. Got some more data coming in. Chicago PMI, 43.6 versus 45.0 expected. That's a pretty sizable miss on PMI, or the Purchasing Managers Index, for the city of Chicago. That means that their economy is projected to be worse over the next year. I'm surprised that that didn't really move the market in one direction or the other, but it is very regional specific, so that's probably why you didn't get much reaction out of it. Still a ways from the mother of all trend lines that we're close to on Friday. Let's see. Got down to 393. Mother of all trend lines was down at 392. And now we have an even wider gap at 397 versus 391. I would very much doubt that we would fall 1.5% with consumer confidence. It is possible, but I would say unlikely to test that. Maybe by the end of the week, we could be testing like 390 would be my guess, but that's what, $7 down from where we're trading right now. It's 1.75%, which is about what we saw last week. That was a sell-off that we saw last week, but I feel like last week was filled with a lot more big data than what we're getting this week, especially with the PCE that came out on Friday. So maybe we end up actually trading pretty flat this week. I wouldn't be too shocked if we stayed above like 391, maybe 392. We'll wait till the consumer confidence comes out. Maybe that will shift my opinion. 3 more minutes, and looks like SPY is pulling back a little bit ahead of this report, so maybe we got a little bit of fear in the market going on. Ten-year is retesting 3.98 again. Really wish this would just make a decisive move, but you're probably not going to get the decisive move until after the consumer confidence report. Consumer forecast is up a bit from last month. Let me see. It's about to drop in 2 minutes. Today's reports comes out at 10 a.m. Consumer confidence. So yeah, it is up from 107.10 to 108.5 expected. So I think that is probably going to come in better than expectations, just based on what we saw with the Michigan economic report. The latest one seems like consumers are gaining more and more confidence with the Michigan economic report for whatever reason. I don't know what consumer is feeling more confident now than they did a year ago, but if you look at the latest Michigan reports, consumer sentiment rose 65.0 to 66.4. Actually, 64.9 to 66.4. Let's see if we can find any more of these reports. Michigan again, 64.9 to 67 for consumer sentiment. Even expectations rose too. So I think that consumers are feeling pretty confident right now, at least as of the Michigan report. So probably going to come in to expectations or a little bit above, in my best guess. I'll get to the meta levels after we get this Michigan economic report out. Or not Michigan, but CB consumer confidence. All right. Initial reaction for the 10-year is coming back down below 3.98. Came in at 102.9 versus 108.5 expected. So that is a pretty sizable miss for consumer confidence. Could be recessionary. So considering how sizable the miss was, at 102.9 versus 108. So 10-year is probably going to head down. Dollar is probably going to head down. Yeah, both of those are headed down, so SPY might see a little bit of a rise here. But, I mean, it's also recessionary coming in that low compared to expectations. So, might be mixed results, and SPY might just end up trading flat here. My expectations were probably either going to trade flat or go up. Put credit spread would probably be your best bet. Dollar is headed down. 10-year is down to 396 from 398. So we're not cracking that new high for the 10-year as of yet. If we look at previous reports, this was 3.9 or 106 the last reading, down to 102.90. So about a 4% or 3% drop. But yeah, If the 10-year keeps coming down, if the dollar keeps coming down, I think that's going to be bullish to neutral. So put credit spread would probably be your best trade for today. Unless you get a shift from the dollar index or from the 10-year going back up. Right now I'm looking at a 394, 395 put credit spread for SPY. It's trading 15 cents a piece. It's a decent credit. 17 cents a piece. That's even better. Maybe if we head down to that 397 level, I might be able to pick those up at like, let's see, might be able to pick those up at like 20 cents each, possibly. They're going for 15 right now. I mean, that's an okay credit. I would just rather get more if I can. That way I don't have to put up as much risk. Those are already going for 12 at the bid now, so not even worth opening. They're worth opening at 15, but not 12. I'm not going to take that. Could go to 396. Get paid 20 cents in credit. That's not a bad deal. I'll just be worried about that 397 price level and cracking below it. Let's see. Those are paying 21 cents credit each. 20 cents credit. Yeah, I think I'd be willing to take on that trade. So assuming SPY is going to stay above 396 today, I would just be worried about that 397 level. If the dollar does make its way back up, or if the 10-year makes its way back up, then probably wouldn't want to stay in that trade. New options alert. This is a day trade. Just opened a new SPY put credit spread expiring today, which is the 28th, and I got them at 20 each. Strike prices, I'm assuming that it's going to stay above 396. Hello, welcome. Consumer confidence came in lower than expectations at 102.9 versus, what was it, 108 something expected. 108.5. Down from 106.0 prior. Lower than expectations means that consumers might not spend as much, which would lead to disinflation. Watch the 10-year treasury rates and dollar if they head back up. Time to exit. My session has expired. What the hell, man? What you mean my session has expired? Oh, okay. Put credit spread is what I open. All right, let me log into here. All right, the call debit spreads are pretty much worthless at this point, I think. Put credit spreads are basically break even that I just opened. The target put credit spreads are up 72, still have 53 cents in value. This is 250 wide, so that's still about 20% of its value that it's holding. We're headed to that 173 mark that I expected target to be at after a double B for earnings and revenue. Any other news that's coming out for today? I think there's supposed to be a Fed member that's speaking today. Supposedly, let's see. Fed speaker. Let's see if we can type calendar. And if we can find a different calendar other than this, because sometimes they won't be listed here. No. Let's see. New Fed member. Austin Goolsby is, I think, who's supposed to be speaking today. Austin Goolsby. Speech. Oh, he charges a speaking fee. Okay. Not seeing anything. I think he was supposed to be speaking today, but I'm not sure what time that would be. And he is a new Fed member, so we basically haven't heard anything of how he feels about what's going on with rates, where he expects them to be. So his voice would be pretty important in this, considering he's just a new member. Aw, man. We done messed up the price levels. God dang it, that's annoying. Since we logged out. $2.30. If you have a link to it, that would be great. I just can't find a link to save my life on when he's supposed to be speaking. All right, the put credit spreads that I opened slightly down, $32. I risked about $300 for the trade. I'd be a little bit worried if we go below 397, but dollar index not really moving. It's kind of catching a balance down here at 42 on the RSI, so it's still negative on RSI. And then QQQ is making its way back down with SPY. Not really too surprised there. And then the 10-year is just chilling, 3.96. I would think that if both the dollar and 10-year are coming down, then that would be positive for SPY, and we might get the bounce on that 397 level. I'm going to have to redo my price analysis because whenever I logged out, got to redo the whole thing now. Saw it on Market Watch economic calendar. Let me see. Market Watch. There we go. Durable goods. Today is Tuesday. Yeah, Goolsby is supposed to be speaking today at 2:30. Thank you for that. Jefferson spoke yesterday. But yeah, that's all the big events that are scheduled for today. You had the trade balance. Not really much attention given to that. Retail inventories, that was a little bit important, but didn't really change much. And then the CB, consumer confidence, at 10 a.m. was the big events for today. Tomorrow we got Kashkari speaking. That one I think is going to be an interesting one. I think that Kashkari is the third member that wanted the 50 basis points. Just based on his interview that he had with CNBC, he seemed a little bit more hawkish than he had been previously. So I think Kashkari might say that he's the one that wanted the 50 basis points. He's speaking at 9 a.m. tomorrow, so that could shift the market. Well, if he says that he's the one that wanted the 50 basis points, that would shift the market down. And then if he says that he would rather have 25, that would be positive for the market. Thinking about running AMC puts. Betting against AMC and the meme stocks might not be a horrible idea if rates continue to perpetuate up, but with the rates coming down at the moment, probably not your best trade to make right now. All right, let's get these price levels back on here. Notion, scroll to the bottom for my technical analysis. We're supposed to be in a range of 389 to 404. Let me go to the daily chart for that. All right, so there's your expected range. Price levels at 397, 401.44, 47.51. Just gonna draw these on here, make it easy for myself. $397, 401. I think it was 44. Yeah, and then 407.51. And doubtful that we'll make our way all the way up to 407.44, so we'll leave that one out. And for other supports, we have 395.25, 389.75, and 386.58. So 395.25. Can't get that exactly. Uh, 389.75. What would be the next one down? Way down here, which I think we might be able to reach by Friday, but that's if we get a bad services PMI report. All right, so there's our price levels that we got back on. Working with a large account, what would you suggest looking at? Just joined the live a few minutes ago. I would say, I mean, the thing that I trade the most is just SPY with credit spreads and debit spreads. You don't have to use them if you have a larger account, but I think that it's best just because you reduce the pain of implied volatility In Vega, you don't have to worry about that as much, but you can always base it on like your break-even price, right? So if I think that SPY is going to make its way back up, say by the end of the week, you could even extend your expiration dates if you have a little bit more cash to spend with your trades. So say I think SPY is going to make its way back down to the bottom of the mother of all trend lines, which started back here. Get this back on the chart again since that got deleted too. And then has been headed down ever since. Let's see, roughly like so. Extend that to the right to go on. So if you think that the markets are going to be coming down, say over the next few weeks with the CPI report coming out in a couple weeks and with the Fed members or with the Fed meeting on March 22nd, then I would probably say SPY is going to be around $380 by like March 24th to like 30th. Sometime by the end of March will be my guess. Then you also have that Fibonacci level around the same price at 380, which I would have to pull up to, but yeah, 380 by the end of March would be a decent trade to take on. And you're looking at spending probably a decent bit for it, but you'd want to break even of around 380 or above that, just so you can get a little bit of leverage with the trade. So say we go out to March 30th-ish, March 31st. We're looking at puts. Say I buy this 395. This would be out of the money. You don't have to go out of the money. Say you went with a 400 put though. You're paying $1,050 almost. And if that prediction is correct, if SPY does make its way all the way back up or back down to $380 over the next month between now and March 31st, that option would have 400 minus 380, $20 of intrinsic value. So this option would go from $1,030 to $2,000 if SPY does manage its way back down to 380 over the next month. So that I would say is a decent opportunity. $10 years down to 395. IWM is still managing to stay positive by a decent bit too, up 0.6%, whereas QQQ is flat and SPY is down 0.15. That's shocking that IWM is leading the way today. And one of my favorite stocks, FLGT, is about to report earnings today. This is going to be a fun one. Today after hours, let's see what the earnings expectations are. Earnings whispers, FLGT. There's probably not much coverage for the stock anymore. It used to be very popular, but lost its popularity over the years since genomics really isn't a popular space anymore compared to what it was in 2021. But the consensus earnings per share is negative 78 cents. Revenue is expected to come in at $59.4 million. Jesus Christ, that is abysmal. And if you look at FLGT earnings history, I'll do my little graphic that I usually do for earnings. Robinhood, or not Robinhood, Notion is the page that I use. FLGT, Not going to do the expected range or support or resistance levels yet. Just want to look at earnings and earnings history. 78 cents, 59.4 expected. All right. So we'll duplicate this. Okay. It's expected at negative 78, 0.78. Worsen, negative 78. And then expected revenue is only $59.4 million. That's terrible. 54.9. And their earnings history. Let's see, earnings history, Fulgent, FLGT. From Market Beat, let me pull up SPY. Currently bouncing on that 397 level. Both the dollar index and 10-year are holding their downside, so looks like we are going to get some neutral or bullish price action out of SPY, which is good. What we want for the put credit spread. And let's see. So if we look at the earnings, has been all positive for the last 8 quarters. The problem being that this company made a lot of money on COVID and distributing COVID testing. Obviously, COVID testing is not really prevalent anymore. But 1, 2, 3, 4, 5, 6, 7, 8 quarters. They started with 620 earnings per share, 659. Actually, I'm not even going to go that far back. I feel like that's not too relevant. I don't know. With 11 cents at the last quarter, 59 cents at the previous quarter. Can't really take much data out of only 2 earnings. But they're expecting revenue to drop by like 40% quarter over quarter. I think that they're probably going to beat on revenue. And then earnings per share, I think they can still beat on their earnings per share too. Just because this is a company that's been, making a crap ton of money over the last few years. I think they're probably going to beat on the earnings, probably going to beat on the revenue. So let's get the price levels for FLGT. Currently trading at 32.69. It's pretty close to its 52-week low. Not too shocking there. I can't imagine that it's going to move a ton in either direction. It's not a very popular stock. Let's see, 440 expected move by the end of this week. Next week is 589. All right, so $4 in either direction, $4.50 in either direction would put it somewhere between, we'll call it $32.50 right now, plus $4.50 would be 37 at the top. Minus $4.50 would be 28 at the bottom. So your expected range is 28 to 37. I'd say that's a decent expectation for the range. It's hard to find any gaps in the chart. There's one right here. I guess we'll look for candles of significance instead. Actually, we do have a gap in the chart right here. Low of this candle was 35.21. You got 2 tops at around 36. You got another gap in the chart right here, 36.73, 75-ish. 36.67 actually. All right, and And then on the downside for supports, you're probably going to get some support right around this small gap, which ended up being a balance later on at around 33 or so. Low was 33.06. That would actually be a resistance since it's slightly above where it's trading right now. Below that, you're looking at probably 31.80 from this candle of significance. Decent push up on this day. We'll call it 31.75. Actually, 31.80 I think would be more accurate. Yeah, ended up being a support level right here. Supports at like 31, too close to the 31.8 mark, so not going to use that. And then I think the obvious level at $30. And maybe a 52-week low, but I think that's out of my range of expectations for their earnings. Granted, I do have some bias with 150 shares of this company, so take my word with a grain of salt. We'll call this 28.50 will be my last price level down. And I think with the earnings beat, revenue beat, and if they can increase guidance, this would go above 35, maybe 36. But I think it could maybe crack 33 just with the earnings and revenue beat. All right, so we'll fill this out. If they beat earnings, beat revenue, probably be above 33. If they miss earnings, beat revenue, probably above 30. If they miss earnings, miss revenue, that I think could trigger a new low. We'll call it below 29. And then for a beat on earnings, miss on revenue, say 31 would be my price target. So I think 33 is a decent bit. Let's see. For this one, I wouldn't trade spread options with it just because it's not a heavily traded stock. It doesn't have a lot of volume. Like today's volume for Fulgent is how much? Let's see. FLGT, a whopping 19,000 shares traded today. So don't put a lot of money on this. Otherwise, you could just get trapped in the bid-ask spread. But let's see. Looking at a 25 call expiring for April, that one's going for $33. And if I'm looking at the March 17th expiration date, you're paying $9.90 for a break even of $33.25. So I feel like that's a bit much. These premiums are really jacked up. Let's see. $33.25 minus $32.60 at the moment. So this has like 65 cents of extrinsic value still left in the option. I just wouldn't want to be paying $1,000 for an earnings play. Maybe we could just buy more shares of the company. Before their earnings report. I've been buying like $200 a week of them. Buy them in dollar amounts. 200. Six shares. So now I've got a total of 156, I believe. Average cost is still pretty high, just because I started buying this at like 90 to 180. So still have ways to work my way down to get the average cost of it down. How many shares do I want to hold of this company? I would say probably 200 shares. That way I can sell cover calls against 100 shares of it. That would be ideal. Buy alert. Just bought 200 of FLGT. But yeah, my goal would be to get it to 200 shares of the company, so another 40 shares, which would cost me another 40 times 30-ish, $1,200. So another 6 weeks or so of dollar cost averaging if it stays around the same price. And again, the reason being, I would want to sell cover calls in half of the shares, so I could sell one cover call. I don't think that they pay a lot, though. That's the problem with this stock, is not many people pay that much attention to it. But say you do an at the money or close to the money 35 call, you get paid $85 for a 3,500 investment. So you're getting 35, about a 2% return. And then, you know, if you do get assigned to have to sell your 100 shares at 35, you still have another 100 shares left over. No, I'm not doing it as of yet. I would rather have the extra 100 shares before I start doing that. All right, it looks like the Zoom put credit spreads are working out pretty well. These are down to 17 cents a pop. That's pretty good. And then the Target put credit spreads are up 50, or I guess 30. Trading at 73 right now. Well, last week Walmart reported good earnings, but they still ended up coming down by the end of the week. That's what I'm a little bit hesitant on right now. We're really not seeing much movement at all out of the dollar index or the 10-year. They're just trading pretty flat. The lows, or not the lows for the 10-year, but the lows for dollar index, not really moving much at all. And for the 10-year, it's trading at 396. So basically been in that 395, 396 range for a while. Good 20 minutes, 30 minutes. After the consumer confidence report. Maybe an iron condor could be best fit for today's market. Choosing the upside target would be a little bit tricky, I would say. Could say 399 maybe, but I feel like that's a little bit too close for my taste. Maybe the 400 mark, but even then, if you're coming close to 400, it's probably going to get tagged. So I think I'm just going to hold the put credit spread, and maybe we can add a little bit more. Let's see how much I risk to begin with, and if I'd be willing to risk any more. Let's see, I opened 4 of them at 20, so that's 8, 16, 24, $320 in risk, which is about what I put down on usual. So I guess I'll just leave the trade alone. If you do a put credit spread, whichever company you believe in for the price you want to pay, let's say goes against you, then you can exercise your put in the owner of the shares, so it's a win. Yeah, I mean, you could do that if you have the cash available. Most people, whenever they're trading put credit spreads, don't have the cash available to buy the 100 shares of the company. But that is one way. Getting skinny and Greg's getting swole. I haven't worked out since last week. I've been kind of lacking on my training program. Really want to get back into my small off though. This is supposed to be my intensity cycle of small off, so that'll be fun. Dollar index making its way back up from the lows at least. Very strange how the Dow is down the most, whereas IWM is up the most. I guess that's based on the dollar index. That's the kind of the fear, greed, and a measure of risk on, risk off. So if the dollar is down, it's more risk on sentiment, which makes sense for IWM to be up if the dollar is down. Dallas Fed Services revenue, not really important, but it came in at 6.6 versus 4.9 expected. Texas Services sector outlook, negative 9.3 versus negative 15 expected. I'm surprised that did move the market in one direction or the next. It's regional, but at the same time, it's services, so I feel like there would be given more attention to it. But it came in at negative 9.3 versus negative 15. Surprising that Texas Services outlook would be negative considering how high services inflation is right now. I would think that would push the markets up, but given that it is, just Texas and not the entire U.S., not really shifting the market one direction or the other. Yeah, this has been a very boring week. I would agree with you there. Probably going to continue to be a pretty boring week until Friday, my best guess. Iron Condors would be the win for the beginning half of the week. All right, Zoom is making its way back up to that 74.50 level. Target's making its way back down to 168. I thought they would go to 173 for Target, but just missed that price target at 172.77. What price would I sell puts on Neo? I would not sell puts on Neo. I would not want to invest in a high-end brand, Chinese electric vehicle brand, considering that their economy is not doing so hot right now. They're going to see a lot less sales compared to something like Li Auto. Or if you're looking at Xpeng or Xpeng, I don't know how to say it. I think those would be a better investment than in Neo, just because they offer vehicles at a much lower price than Neo does, and that's better fit for an economy that's deteriorating like we're seeing in China. But they were planning to make some lower end vehicles with their new factory, so you might get a little bit of a bounce whenever that happens. But high priced vehicles in a deteriorating economy, not exactly the best unless they're able to lower their prices, like you saw for Tesla recently, dropping the price of the Model Y from 65 to 53,000, and you're getting the 7,500 credit. So if they can lower the prices, that would be bullish for NIO. Yeah, XPeng, Li Auto, both of these have been beaten down to hell. Not really too surprising. Actually, Li Auto is kind of leading of the three, interesting enough. But I think that's all the trades that I'll make for today. So let me type in all the trades that I made. I'm about to be moving out of this apartment, so got some cleaners coming my way in about 15 minutes. But going to the February log. Made 2 trades today. Yeah. QQQ put debit spread. Was the first one. QQQ put debit, which is a bullish to neutral strategy. Another bullish. Oh wait, no. Put debit spread as a bearish strategy. My bad. Expiration date is 2/6. Strike prices were 291, 290. I opened 6 of them for 33 a pop. Whoopsies. 0.33. And then the SPY put credit spread, which is a bullish to neutral strategy. Expiring today. Let's see. Strike price is 395, 396, I think. Yeah. Okay. 395, 396. I opened 4 of them at 20 credit each. I think I got the formula on this backwards. Keeps giving me negative numbers. Oh, well, maybe if I typed in the right date, that would help. 3/6 instead of 2/6. There we go. For some reason, this number keeps coming in. Whack. Ah, that's why. Average DTE is 1.5 days, so 1 to 2 days until expiration is what I usually trade. Most of the profits has come from swing trades, basically breaking even for day trades, but hopefully we can turn that around. But yeah, any thoughts on Rivian? Rivian, again, that's kind of a high-priced vehicle. What are they going for, like 80,000, I think, or something like that? And in an economy where people are spending more money on things that they need, like food, shelter, and stuff, not going to have as much money to spend on, how much would it be, like a $1,200 car payment or something like that? I think that it's just infeasible for most people. So yeah, I think their outlook would be pretty negative. I don't think they're going to see much growth until we get a resurgence in the economy, which might not happen for a couple years. Am I better off buying 100 shares of the stock than buying a call option because of extrinsic and intrinsic value? You can always spot decent opportunities, I would say. If implied volatility is low, especially around a big event, then you can gain value out of that. Like for Visa, before their earnings, they were trading at like 5 IV percentile or something crazy like that, and their stock ended up going up a crap ton. So you can make a good opportunity if implied volatility is relatively low. So look at IV percentile, and that'll give you a good idea of whether you should buy calls, buy puts, or do credit debit spreads instead. But yeah, that's all the trades I got today, and I will catch y'all tomorrow at 9:30. See you, everybody.